And welcome back, everyone, to the Bitcoin Business Bureau. I'm your host, as always, LitecoinLeader. Today, we're going to talk a little bit about something that's probably a key part of what we all want to talk about in cryptocurrency, which is money. What is money? Why does money exist? I think that's a very key question to ask yourself before you ask some of the harder questions, which we'll also get to a little bit in this video, such as why does Bitcoin have any value? Well, the question really is, why was money ever invented? Okay, let's start there. So money was invented, first off, humans are the only ones that deal with money. As far as I know, no other animal or entity or anything, any sentient being on the planet deals with money. The reason that money was invented was because it was just easier to deal with than doing barter, exchanging sheep, wool, coal, bricks, whatever, and try to figure out, I'll give you a goat for a sheep or bricks or whatever. That's the basics of trade have existed for a long time between humans, but the purpose of money was to make life simpler. And the reason that that money makes life simpler is we have to go back to what are the properties of money and what's the purpose of it. And then we have to give the examples of money and how they've improved over time. So, for example, like the properties of money, which I've talked about before in several videos, and the Hidden Secrets of Money by Mike Maloney is probably one of the best series. If you've not seen that, you should definitely watch that, especially episode 1. I'll try to link that up here. But the basic properties of money, there's typically 5 that they list, and that is durability and scarcity. And that's what we talk about a lot about when we compare gold and Bitcoin. But there's also other things, and divisibility too. But there's other things about durability, portability, acceptance, and fungibility. All those things are what's looking for in money. And I'll go over them briefly here just to let we all have a foundation. If you want to skip ahead, go ahead. Probably about 2 minutes or so. But durability, that's basically that the money can last. And that means that you're not going to take something that's going to die or expire and use it as money. For example, you're not going to use cows. You're not going to use livestock. You're not going to use plants, things that can easily perish or just go bad. I mean, you don't want to use that as money. You want to be durable, things that can last for hundreds, even thousands of years. And that's why gold has been used so much. We have Spanish doubloons from the 1400s that are still around. We have money that in the form of gold that goes back to the Greeks, the Romans, the Aztecs, the Incas, ancient civilizations for 5,000 years, Egypt. It's all this money that's still around that's been used by humans for a long time. So gold and precious metals has pretty much been the gold standard. It's been the gold standard of, I'm trying to think of another term other than that, but it's been the barometer. It's been the key metric of measuring any other form of money. In history, people have used, civilizations have used beads, shark teeth, seashells, whatever was relatively rare in that community, they used as money. But that's when you get the other properties, such as, how scarce is it? How easy can I go dig for more clamshells and, all of a sudden I've got more money, or make more beads, or and fungibility. Fungibility is about like the uniqueness of one thing to another. If I have, let's grab something here. So if I basically have these 2 markers, I have a red one and a black one. They look the same, but they're different because they write a different color. Just like if you had an NFT that was different, unique but different. I could have a ticket for the same concert, but it wouldn't be the same seat. There'd be some uniqueness to it. If I picked up $2 bills, yes, they'd have different serial numbers, but for the most part, they are exactly the same because they can go to a store and buy whatever a dollar can buy for that dollar bill, and it doesn't matter which dollar I give the merchant. So that's the fungibility, and that translates well over to gold and silver and Bitcoin. But back to the key first question, why is there money? Money exists because it makes life easier. And it's much easier to go to a marketplace or even wherever that marketplace is. Could be online, could be physically, could be just however far or near it is. It's much easier to go there with coins or paper money before the advent of Bitcoin, or electronic money. But it's much easier to go to, let's just pick the 1900s. So it's much easier to go to the store with either dollar bills or some form of paper money or gold coins or silver coins than it is to bring your actual goods. So I'm not going to load up my car with 3 goats to try to go to the market and swap. I might sell the goats. Yes, I might have a store to sell the goats. But if I'm going to purchase, I would much rather take money, because now I have larger acceptance and fungibility, that everybody knows that one gold coin is one gold coin, just like any other gold coin. Historically speaking, I mean, I'm not talking about when they started to manipulate the money and clip the corners of it and so on. But that's the purpose of why money. So for years they had different forms, but the true gold standard, no pun intended, has been gold, because it's got all these strong properties of money. It's been the best example of money for human civilization. Now, the rest of the animal kingdom, or maybe extraterrestrials, whoever we talk about, they may see no value whatsoever to gold. I mean, just like it's a metal. Like, yes, it can be used for certain goods and for certain things, gold fillings, circuit boards, whatever. Silver is used a lot in a lot of different things too. In fact, you're probably watching me on a device that required silver just to even operate, if it be your mobile phone or your laptop. But these are all, essentially, they have value as the pure essence of gold or silver, the actual physical metal itself, the pure self. It's worth money because it's so exchangeable and so accepted and so portable and fungible and durable. I mean, if I bury silver or gold in the backyard 100 years from now, we can dig it up and it's probably still going to be in pretty good shape. Can't say that about a cow or a goat. That's going to be dead. So you get the idea. So that's first off, that's where I just want to start today. Why money? Now, why does money have any value? That's where human beings really come in. Again, animals, like if I give a gold coin to a monkey, he might throw it. If I give it to a dolphin, they'll just let it sink to the bottom of the ocean. It's not going to matter to them. But human beings, they value this because they understand the purchasing power behind a gold coin. So what gives money any value? Human beings do. A belief that this thing is a store of value and is a means of exchange for other goods and services. That's the whole purpose of money. It's to make life easier to do trade and to get the goods and services we all want or need. That's the whole purpose of money for humans. So gold and silver are the best forms of money for 5,000 years. And now comes along electronic money, such as Bitcoin, which has the same properties of gold and silver, if not better. It's more durable as long as the computers run, and we talked about that before. And I've talked about that. I'll post again my videos from earlier this week. But we've talked about this several times, not just this week, that Bitcoin is just it's a digital gold. That's what they call it. It's more durable, it's more divisible, it's more portable, it's more scarce, it's more rare because you can find more gold. You can find more silver, you can find more other things, other commodities that we use for. They either become goods or help us to make more goods and services, or energy. So I know Michael Saylor talks a lot about that Bitcoin is a form of digital store of energy, which that proof of work really translates that work, expending energy in the form of electricity through the miners, translates over to Bitcoin. So Bitcoin is a store of energy, and that can be translated into value into anywhere else that you want to exchange that store of energy to something else. So let's bring it now to the other forms of currency, which I'm not going to call it money, but currency in the world, which is fiat currency. Why does the US dollar have any value? If it still does. But why is it, why does it have value, and why is it losing value over time and purchasing power? It's really about first, it was backed by gold. So the best form of money was backing it, which was great. But as soon as you get to a fiat currency, a currency no longer backed by a tangible asset, even oil, which is completely off the rails in its value, it goes up and down all the time, which is probably a good indicator of the volatility of the fiat currency market. But the only thing that gives this the value of currency, the value to currency, is our belief in the backing of that currency. For the most part now, every fiat currency is only faith in the system and faith that created it, which is basically the governments itself. So then we start to get into, again, forms of different money. We have gold and silver, the best, but we have other things that we use for money. We have Bitcoin, we have stocks, bonds, corporate bonds, which we'll get to in a minute, which will be another subject. I just can't help but go more in one subject. This is probably going to be a long video because I'm covering two big topics, but I wanted to get them both out there today so that people wouldn't talk about it. And please, leave some comments down below. Let me know what you think about my views on the money and my explanations, and what we think about corporate bonds and Tether, which we'll get to in a minute. So the issues with money today, it's really about the fiat currency. So it's not the money, it's the currency. Then there's a difference. That money is a store of value, which means it's holding its buying power over time, versus a means of exchange. Now, money can be used for both. The gold coin, and historically, I've talked about this before, it buys a good man's suit in history. In the medieval times, it was a suit of armor. Now it's a nice tailored suit, basically 1 ounce of gold throughout that period of time. It's that's value. Also, a first-class plane ticket across the United States has been about 1 ounce of gold. So the issues now are that we have currencies that are only backed by the governments and the banks. So those two systems have interceded in what humans have created as money. And those two entities, or forms of entities, the governments and the banks, have basically corrupted the money system. And they've turned currencies to pure currency, forms of money to just currencies and fiat currencies, which means they're not backed by anything except faith in the system, which most people are losing faith in the governments and banks, especially central banks. For the most part, that's what we have. So that's led to, we're losing faith in a lot of different forms of stores of wealth and value, and we see that through inflation right now, which has been historically, that's what kills fiat currencies. It's killed it time and time again. There's no fiat currency that's ever existed that's lasted in the period of the 5,000 years that we can say gold has been money. Like, we no longer have the Greek, Roman, Aztec, Inca, Spanish doubling, all the forms of fiat currencies that used to existed are all gone. Now we have the US dollar, the British pound, the euro, and a few other countries' currencies that are around the globe, but they all pretty much track to the yen, yuan, and the other ones. So again, now we have counterparty risk, not just the faith in the government, but can the government actually enact things to tax or take our wealth, take our value, take our purchasing power, basically take our money through taxes or legislation that will outlaw certain forms of money. So that's the risk. You have a third party or counterparty risk for certain forms of money. So how do we move this? In history, we've had issues as they'd seize gold, that you'd have banks and governments just doing various things about confiscating gold. And the reason that they confiscated gold back in the 30s is, again, we were the US dollar was collapsing just after 20 years. The average length of time that a fiat currency lasts throughout history, about 28 years. That's it. So the dollar to last over 100, I think it's 108 years. It'll be 109 soon, because it went back to 1913. It's been reinvented several times. We had the gold confiscation in the 30s. We had Bretton Woods in the 40s, 1944. We went off the gold standard in 1971. Then we had the too big to fail 2008 issue, and now we're right here again. So the dollar's been reinvented 4 or 5 times in its 100+ year history. So you can kind of make the argument of 28 years is kind of held true. So, okay, so where am I? So we have issues with the government and banks that could have fractional lending, interest, all these things that reduce the buying power of our money and change our currency to have less and less value. So you'll see the migration away from those forms of currencies to better stores of value if those other systems start to collapse. And we have those counterparty risks, like we said, with the government and the banks. And those entities, the governments, the banks, the fiat dollars, the fiat currencies, and even such things as organized religion, all have value and power over people because people give those things power and value. The government was formed by the people. The currencies were enacted by the governments that were put there by the people. So the banks were also, we use the bank system. We could choose to not use the bank system. Many people are unbanked still in the world, about 20 to 30%, believe it or not. I think it's about 2 billion out of 7 billion people. That's 28% roughly. So People can choose to give power or take it back if they so choose. That they wake up and say, you know what, I no longer believe in this system. Maybe I should go to something other, change my belief system to something else. Maybe that US dollar is not as strong as I used to be. Maybe I should look at things that are trustless, things that are not governed by a particular government, my government or any other government, that can enact laws that can inhibit what I can do with my store of value. I've worked and I've changed I've expended energy, and I've gotten compensated for that expenditure I've been giving some compensation for my labor. That could be goods, services, or money itself. And for me, that money should be a store of value or store of my energy to expend and spend at a later date on goods and services that I want or need. That's the whole point of money and storing, is acting as a store of value. If the current versions that I'm using are losing value rapidly, or even over time, as we see in the dollar, historically, no question, the dollar has lost 96 to 98% of its value since 1913. That's about 3% a year. They say, inflation 2 to 3% a year. That's what they're shooting for. Inflation is theft. It's pure and simple. It's stealing away your purchasing power. So how do you get out of that? You get into a system where it's trustless, governless, and in a system where humans put value into that system. That's Bitcoin. Bitcoin has all the properties of gold, silver, and precious metals as a store of value, but it's also more portable. It's trustless, which means it doesn't have these governments or banks that can manipulate it, because if one country said something, you can just go to the other country, and so on and so on. And again, the scarcity, we know it's the only asset we know exactly how much there's ever going to be. 21 million Bitcoin, that's it. So again, I've talked about this in other videos. I just wanted to talk about why money exists and why does Bitcoin have value. Humans give it value. People give it value because what are the alternatives? We have to store our value somewhere. We expend energy every day. We work, we do things, we invest, we do all these things to try and increase value for ourselves and our family and our legacy, our heirs, so that we can have the value today, get what we want and need, and also buy things in the future. I have a store of value. To have a store of value, you have to look for the best options out there. You can hedge your bets and be in several different things, but gold and silver has been the best form of money over time. And now it's being challenged in the last 12 plus years with the advent of Bitcoin, which is programmable money. And it looks to have every property of gold, if not better. So it's not tulips, it's not real estate, which all have impacts from different areas. I don't want to run this too long, but we talk about tulips another day. We talk about other real estate another day, but you get the idea. Bitcoin has every property of gold and then some. It's programmable money. It's scarcer, and it's easier to move, and it's trustless, and you don't have to worry about a government or a bank seizing it for the most part, if you're careful, if you know what you're doing. So other forms of money. Let's talk about this real quick, just to bring this full circle, because I saw this conversation come up, and I think his name was Mike Adams. I'm not really familiar with him. I'm going to try and find him real quick. Hold on 1 second. So I went and listened to a podcast by someone by the name of Mike Adams, and I'm not really familiar with his work, but I listened to him, and it was almost an hour and a half that I listened to him. He talked about both him and David Morgan. He listened to some reports from David Morgan, and if you don't know who David Morgan is, I know David Morgan. I haven't met him, but I know of him. He's a silver guru. He knows a lot about silver. He's been doing it for a long time. Those who are experts in the field of silver and follow it closely know David Morgan's name. He's one of the best that's out there. But he started to talk about crypto, and he's did some homework on the issues with Tether, as did Mike Adams. And Mike Adams' podcast talked about how there's a danger that Tether could go belly up, or that Bitcoin could be, I don't know, some kind of nefarious actor type coin or entity. And Mike Adams even says he's not in crypto. And David Morgan talking about crypto, that's not his forte, that's not his strength. I respect his opinions on silver immensely, but he's not a crypto person per se. I don't know how deep he goes into it. I'd have to dig into that, but I know first and foremost, he's a silver guy. So what were they talking about? But I did not listen to David Morgan's videos yet. Feel free to link one down below if there's one I should definitely listen to. I'll be more than happy to listen to what he has to say. Be more than happy to debate either one of these gentlemen if they wanted to. But they're talking about the two things. One, that the creators of USD Tether could be nefarious, and that could lead to nefarious actions with Bitcoin that could all go to zero. So first off, Bitcoin doesn't care. Bitcoin is a software program. It doesn't care who's using it. It could be good people or bad people, just like if you had a briefcase full of $100 bills. Doesn't matter who possesses that suitcase, right? It could be a good person or a bad person that can use it for good activities or bad activities. The dollars inside don't care. They're just pieces of paper. They're just accepted, just like Bitcoin. If Bitcoin is on a cell phone in a wallet, and I give that cell phone and its private keys or access to, if I give 10 Bitcoin to someone, it doesn't matter if the Bitcoin doesn't care if I'm buying something illegal or something legal or something, good or bad. The Bitcoin itself doesn't care. It is just software code. And that's all it is, a store of value, just like as a gold pieces. It doesn't matter. Like if back in the Middle Ages, or I don't know, 200 years ago, if I happen to buy something illegal, I won't even go into an example, but you get the idea. But if I went to an auction and bought an individual, that's going to be viewed as good or bad, mostly bad now, of course, as it should be. Or if I bought, whatever else is illegal in a particular area, the money itself doesn't care what it's used for. It's just a means of exchange, a store of value. It itself, the form of money itself, is not good or bad. It can be used for good or bad purposes. That's a big, important distinction. Now, the people behind USD Tether, and I'm not going to get into all the details. I will mention some of the names. You can do your own homework on them. I can also talk about them more freely on my Patreon and also on my AMA, which I should say is tonight at 9 p.m. Eastern, only for my Patreons. So you can join me on a Zoom call there. We'll talk for about an hour or so. We can have a conversation about whatever you want to ask me. You can ask me about these topics. You can ask me about coin projects. You can ask me about whatever, which way I see Bitcoin going, which is typically up over the long term. But the short term is always harder to gauge. But again, getting back to the USD Tether, if you want to do more homework on this, there is Block One, there's Bitfinex, and then there's Brock Pierce and EOS. All those individuals or entities were involved in working with Tether. Now, I will link this video up here. I know that Guy over Coin Bureau did a great virtual audit of Tether, because Tether did release a report of how they are backed. They used to say back in the early days when I started in 2016, 2017, Tether was talked that they were 1 for 1 for the US dollar. For every dollar of Tether, there was a dollar backing it. Well, that was BS, and we all expected that, suspected it, and it proved to be true. And now it's basically about 2/3 corporate bonds. The question now is that, first off, how are they creating more money and are they using this to buy more Bitcoin and to, surreptitiously steal value from the marketplace and just steal from the rest of the cryptocurrency world? Could very well be possibly true. But let's gauge this now. So if you go to CoinMarketCap now, and I'm not going to share my screen, but you get the idea that Bitcoin is essentially $50,000 today, and there's roughly 20 million available today. And we're not at 21 million yet, but just for round numbers, 20 million times 50,000, that's $1 trillion. So Bitcoin is $1 trillion. The market cap of USD Tether, which is going up, which we'll talk about in a moment, is roughly $8 billion. That is 8%. Is that right? I think that's right. I think it's $8 billion compared to 1 trillion. That's not even that's small compared to Bitcoin. But the question, and I think I might be off by a decade, Dave. Let me check real quick. I think I am. Yes, Tether is the fourth largest Binance coin this past. So it's roughly $80 billion, not $8 billion. So it's 8%. I was right on the percentages. So it's $8 billion, $80 billion, or 8% of Bitcoin. which is roughly 40%, 40 to 50%. It moves around a little bit. So today's market cap of the entire crypto space is 2.4 billion. So Bitcoin is 1 billion out of 2.4 billion. That's like 40-ish%. And then Tether is only 8% of Bitcoin. So the theory and the concern, which is a legitimate concern, is that they are creating more Tether. However, they're doing that. We'll talk about that in a moment. They're creating more Tether, using that Tether to buy more Bitcoin. And then now they've basically essentially created more wealth for the team behind Tether. Now, through the audit that Coin Bureau did, it shows that they're mostly backed by corporate bonds. Let me explain corporate bonds, which is another form of money. And back in the days of banks too big to fail, or companies that are like, so companies or governments that issue corporate or government municipal bonds, these are almost like cash. And they do have a return. You buy it and you get there's like, I won't go into the terms, but you basically buy it at a discount of its face value. So if you have $1,000 bond, you might buy it for $975 if it's a really strong bond, because you're gonna get that extra $25 in a few years, because it's such a strong, it's low interest, low risk. So that's almost like cash. Now, there's also junk bonds. That's the other extreme. Now, let's say like you find an Enron bond. Okay, remember when Enron went belly up? That when a company goes really bad, then you can buy it for like that same $1,000 bond face value might be $50. It's pennies on the dollar. Bring this back now to Evergrande. So now Evergrande is essentially was viewed as virtual cash in Asia because they were such a strong entity, they could too big to fail. Now they're starting to fail. So now you're seeing the value of their stock and their bonds go plummeting. So bringing this to Tether now, Tether is backed about 2/3 by corporate bonds. The thought is that could very well be Evergrande, because now the way if you look at the market cap, which is much more important for Tether than the price, because the price is essentially a dollar. That's what stable coins do. They've gone from roughly $10 billion market cap to nearly 80 in about a year and a half. Where is this money coming from? Well, odds are they're buying corporate bonds on a discount and then using the face value to say that's what they own. So for example, let's say they want to print $10 billion of Tether. They could buy corporate bonds that are basically junk bonds for 500 million at 5 cents to the dollar, and then say these face values are 10 billion. So now we can go and print $10 billion of Tether, but it only costs us $500 million. They basically made 20x on their money, because as soon as they do that, you're going to take that Tether and turn it right into Bitcoin, and now they've got more Bitcoin. So that's the concern and the danger. But let me allay some of these fears. If Tether was to go completely off the rails and just went to zero tomorrow, or a penny, whatever, basically went belly up tomorrow, that is 8% of Bitcoin, which is 40% of the market. So call it like 4% of the entire crypto space. Okay. So we lose 4% of the entire crypto world on a bad day. We've lost that over this weekend. Last Friday, when Bitcoin went from the 50s to the 40s, we lost more than 10% across the entire market. So if Tether went belly up, it would be a red day, and a typical red day. But what will happen is that there will be an overreaction in both in the marketplace and also outside of the marketplace in the perception, because they'll be like, oh my God, Tether, this allegedly stable coin is now dead. So now there'll be delistings of all these exchanges, that all these pairs that were like Bitcoin to Tether, and everything else seems to be paired to Tether. But Bitcoin might drop 10, 20, 30% in probably an overreaction. It will probably overreact to 20, 30% down, even though we've only lost 4% of the market cap in all of crypto. And this is if Tether has died. Now, if you have Tether, which many of us have been recommending, don't have Tether, have a different stable coin, USDC, True USD, or even UST in Terra, which is a strong up and comer now. Have your money there if you're going to hold cash reserve in the crypto space. But if Tether goes down, expect for an overreaction. So Bitcoin will come down 20 to 30%. All coins will come down 30 to 50%, maybe more, and it'll be a fire sale. And we've seen those in the past. People newer to the space will say, they'll be screaming, oh my God, what's happening? That's why you listen to people with more experience like myself. We've been through these things before. We've seen even in an up market where Bitcoin had a big bull run 4 years ago, we had, I think, 5 times we lost 35% or more in a day. And Plan B pointed that out just the other day. It might have been, I think it was in a day. So don't overreact. It honestly, the best thing for the entire crypto space is if Tether did go belly up and we got just washed it out, because how are they going from $10 billion to $76 billion, $80 billion in a year and a half? How are they doing that if they're not backing it with a dollar? They're basically leveraging the money that they have by buying these bonds, creating more money and buying more Bitcoin with it, which is, of course, not cool. It's not a good thing to do in the marketplace. I'm sorry to get all technical by saying it's not cool, but it's nefarious. I would say it's not on the trustless, up and up kind of thing that most people would want to do in the crypto space. But again, Bitcoin doesn't care. It's just a form. It's just holds value, means of exchange. You can use it for good purposes or bad. So if you manipulate the markets, which we've all seen whales do, and you wash out people, you dip the price and wash out stop losses, and then it comes right back up. So that's what whales do. That's what probably the group over at Tether does in Block 1. So that's what you need to know about. So again, long story short, it's been a lot to talk about today. I wanted to put all this into context. There's going to be a lot of people talking about crypto space and trying to educate people. Be careful who you listen to, and also listen to multiple sources. You've got to have multiple sources, and I have a lot of them listed over at LitecoinLeader.com. And if you have questions, ask me. That's what my Patreon is for. It's only $20 a month. And also you can join me over for tonight at 9 p.m. on my Ask Me Anything, my AMA. So I hope to see you there. I hope this was informative. If you like the content, please like, share, subscribe, share this video out. I think it's good content. I think it's important for people to hear. Subscribe, of course, as well, and leave a comment, leave a thumbs up. All that stuff helps the algorithm get my voice out there a little bit more. I'd like to, now the whole purpose of me making these videos is to educate the masses as much as I can and to give back to the community. So if you think there's value in this message and the messages I give, please share them, and I would greatly appreciate it. So with all that said, I'm going to close the drawer in the bureau, and I'll say, follow the leader. I'll see you next time.